Subdued to a mixed picture that's emerging from the Asia Pacific.
Both the NI and PAT has beaten our poll.
Sense it's a stable quarter, positive but on low expectation.
24,567 was the low, and that should not break, that should hold.
Will there be a bit of a bounce because the street is net short on Dalmia Bharat and the second half of the year is expected to be better?
Beverage business saw a revenue decline of 3%, a volume decline of 4%.
0.5% higher in the first trades which are coming up, so 24,965.
I had stated that by December it should reach $3,000. It has reached by October.
Parikshit, business is not just one-dimensional, right? It's not just sales. It's also on the bottom line.
The collection side, we definitely got caught on a bad foot.
Things look very, very quiet, right? Though beneath the surface, underneath, there are so many individual stocks where you are seeing some big, big moves.
Are likely to include a complete exemption on pure term life insurance and those pure term life insurance products covering family members.
Actually seeing, as far as the markets are concerned, is that the earnings reactions to specific companies' results is extremely strong.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it is that kind of a day where with the difference of 1 hour, if you looked at the market, you could have felt bullish and bearish because we've had so many episodes of up and down that it's kind of difficult to say at any given moment whether the market is up 50 or down 100. So absolutely volatile session. This is Closing Bell. We'll get you market action over the last 1 hour of trade. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Reema. Nigel is joining us from the newsroom floor. Guys, hi, afternoon.
Hi, so now you're feeling bullish or bearish, looking at the screen?
I am not very bullish. I mean, at least in the very near term, Reema, because we got a nice bounce on Friday, but earnings are the problem as we were talking about.
I'm with Prashant on this one because if you take out Reliance, L&T and HDFC Bank from the mix and look at what's happening in the broader market, I don't think bullish is the word we'll go with.
And never before have we seen such exaggerated falls on earnings misses. Usually markets would look through a bad quarter, call it transient and say things will pick up. They would find the glass half full. But now on earnings misses, you're seeing even large caps falling 9-10%.
Absolutely. I think the word for today is volatile. I mean, I think that you can safely say without getting into a bull and bear. And that graphic should come up on your screen, which basically tells you really how volatile it has been, right? That is, I just sort of mapped the day so far till 2 p.m. because it's, and then you can do it from there. So you basically got a gap up which was up 115 points, then you got a 300-point sell-off, then you got a 170-point gap sort of rally back, then you got a 156-point sell-off, and till 2 p.m. you had a 170-point move higher. This is the Nifty. So
those were managing to get that. Swings have been so many, Prashant, so that's great. You got all the between the highs and the lows of the day.
It just kind of tells you, right? I mean, I think you add that up, and I think the market is, the Nifty has moved maybe what, close to not 1,000 points, maybe close to 1,000 points, right? And of course, there's 13 points to show for it, all of it, as we stand right now, as we get into the last 60 minutes of trade. And I think it'll be maybe slightly better for the Nifty Bank because I think the Bank Nifty, the index will come up on your screen. Yeah, it's been volatile, but not as much as what the Nifty has done in absolute sense or in percentage-wise as well. I think it's all about individual stocks, and I think that's what most of the attention will be, and we'll get you more perspective as we go along. Reema.
Well, let's take you through the large cap action then. So on the frontline pack, on the way up, it's Bajaj Auto, so recouping some of last week's losses. So that's your top gainer with a 4.5% up move, followed by HDFC Bank reacting to the Q2 numbers, very strong, 3% higher. And that's offsetting the pain that you're seeing on some of the other banks. So HDFC Bank, Reliance Industries, L&T, and throwing a few other names like Asian Paints, Eicher Motors. These are stocks on the way up. On the way down, Tata Consumer takes the biggest hit. Tata Consumer is down close to about 6.5%. Kotak Mahindra Bank is down 5%, IndusInd Bank under pressure, Bajaj Finance, Fincert. But the pain is in the broader markets. The mid-cap index down over 1%, the small-cap index down 1.25%. Look at the advanced decline ratio and then the individual stocks and the earnings reaction.
Absolutely. So let's get those individual stocks up on the board to just illustrate a point. It tells us about the market's mood and mind more than the individual stock reaction. Yeah, that's the advanced decline ratio. Look at what has happened to an RBL Bank today or an L&T Finance or an IndiaMART today. Stocks have been hammered. Wherever there is an issue with earnings, where there's a hiccup in asset quality, for instance, with RBL Bank, there's a rise in slippages, there's margin compression, stocks have been broken out of shape, and that's what's going on with some of these names, IndiaMART as well. But even if you go beyond earnings, I mean, there's large-scale profit-taking that's going on. So that would explain what's happening to a Motilal, for instance. Look at Motilal Oswal. Look at JM Financial. There's positive news flow on the regulatory front from the Reserve Bank today. But the stock has already rallied a lot, and the market's choosing to sell on news. It's choosing to ignore the positive news developments. I mean, Ola, Ather, I could just go on taking names. There's a PNC Infra, regulatory issues and concerns over there. So there's just enough and more in terms of the downside move. And Nigel, I was just looking at the VIX as well. Like Prashant was talking about the volatility, right? All the swings in the day. The VIX itself is up 4-5%.
Well, indeed, normally in a market that is trading in the green, the VIX should ideally be down because they have an inverse, relation out there. But I just want to make one point, guys. Sectors that have been prepared for weak numbers, we're not seeing that much of a selling. Case in point being Dalmia Bharat. Now, Dalmia Bharat, if you just heard the wrap earlier this morning, I had said that Dalmia Bharat, the sheet is net short getting into the numbers. And the numbers were a very, very big miss. In spite of that, the stock is almost in the green. It's down only 1% on such a big miss on their earnings. UltraTech Cement just came out with a set of numbers. We'll get to it in bigger detail. But the street was bracing for a weak set of numbers. So that one as well is down only around 1.5% in this sort of a market. Well, those numbers were clearly disappointing. A 6% miss on the EBITDA front. So positioning is rather important. And some of these counters where you're seeing a sharp downtick, the street wasn't prepared at all for any kind of, an EBITDA or an operational performance miss. So I think positioning has played a big role out here as well. Dalmia Bharat now 4% off the low point of the day. UltraTech Cement is still down only 1% and 1.5%. And the miss is quite large. 6% miss is what we're talking about in terms of an EBITDA. Well, let's go across to Mitesh to find out how do you trade the index. Mitesh, as we were going through that market check, well, the Nifty has managed to sneak its way into the green. And the Nifty Bank initially was showing signs of holding one end up. That's trading mildly in the red now.
So, Nigel, I think, one, we've kind of managed to hold on to this 24,750 on a closing basis. I think Thursday the closing was 24,750, and then Friday we opened lower but recovered, and again today, I think after the fall we've recovered. So that's a positive sign. I think if you're not closing to 24,750, that means that we are back into the range of 24,750 to about 25,200, and that's how we're approaching the market. Not actually trying to look into to trade the market, but trading with stock-specific biases and mix of long and sells. And on the long side, as HDFC Bank, I think just highlighting that it's opened the gap up, and while it's given a pullback from the day's high, I think this will present a good trading opportunity. Take a stop loss below 1705 here and look for targets of around 1780 to about 1790 on the upside. That was the recent high which the stock made, and I think a retest is on the cards. And on the sell side is Bajaj Finserv with a stop at about 1786 and a target of 1710.
Okay, all right, Mitesh. Thanks very much for that. The day really belongs to these very, very sharp earnings reactions that we've been talking about. And we'll discuss a lot of this with our next guest, Deepan Mehta, Director at Lexer Equities, is joining us on the show. Before we get to individual stock action and, your recommendations and the like of a Kotak, Deepan, just want to get your overall thoughts on financials. Now, what we saw over the weekend was a couple of negative results, right, where there are asset quality concerns. Nothing is new. It's just the extent of those concerns, the fall in slippages or the rise in GNPAs or the compression in margins, the extent of that, which the market is obviously getting troubled over. What do you think? I mean, is it too early to jump the gun and sort of write off financials, or how should we navigate it? Because anyway, the approach to financial earnings was filled with a lot of caution.
Yeah, so good afternoon and thank you for having me on your show. I think that the fall in the financials seems to have been arrested, and there could be an occasional fall like what we saw in RBL Bank, but by and large cap banks and a whole host of banks, NBFCs are not correcting the way they are, and I sense that there's a slight outperformance over there as well. At the same time, I think we are ignoring the excellent numbers which have come from a lot of tier 2 PSU banks across the board. It started with Bank of Maharashtra, then we have the IOB, Central Bank, Punjab and Sindh Bank, all came with very good set of numbers. And I'm just kind of wondering that the kind of qualitative and quantitative comparison between these tier 2 PSU banks and large cap private sector banks, the likes of Kotak, HDFC, their performance is certainly narrowing a hell of a lot in terms of credit growth rates, or in terms of NPAs, or in terms of net interest margins, CASA ratios. There's a high degree of convergence over there, and valuations are still, I would say, wide gap between the PSU banks and the private sector banks. So I think there's a trading and investment opportunity over there. But on the whole, I want to be overweight the banks and NBFCs at this point of time. I think 2-3 quarters down the line, I don't know what could be the trigger, but you could see a smart recovery over there.
Okay, bullish on banks, NBFCs and PSU banks have thrown in a good quarter this time on the earnings fine print. But let's get to the three major banks which reported their Q2 earnings: HDFC Bank, Axis Bank and Kotak Mahindra Bank. Now, HDFC Bank stands out compared to its peers in terms of asset quality. Abhishek now joins in with a quick analysis.
Growth and quality in terms of asset both has stood out for HDFC Bank when you compare two peers like Kotak Mahindra Bank as well as Axis Bank. So it's a clear review that you can see the stress in the system is building up for others when the going is good for HDFC Bank. So they took the pain of not growing the unsecured book in the last few quarters, that is from Q3 Q3 FY24 to Q1 FY25, and now they are in Q2 FY25 they saw the growth returning for them in the unsecured portfolio. And others, while they grew between Q3 to Q1, they are now facing the music with respect to stress that is being built up in their balance sheet. So take a look at Q2 FY25 results. HDFC Bank saw the best growth rate on a YY basis with respect to ex-treasury operating profit growth. Ex-treasury operating profit growth was more than 12% or nearly 13% YY for them, while compared to Axis Bank and Kotak Bank seeing it between 9.5% to 10%. Net interest margin decline was seen across lenders, but the net interest margin decline for HDFC Bank is the lowest when you compare to peers. Like, it declined only 1 basis point for them, while actually it declined 6 basis point for Axis Bank, and Kotak Mahindra Bank saw 11 basis point decline on its net interest margin. HDFC Bank had slowed down, between Q3 to Q1 with respect to unsecured portfolio growth in terms of credit card as well as personal loan. So part of Q1 FY25 performance that you are seeing on your screen for Kotak Mahindra Bank was also due to the impact that they had received restriction on growing the credit card and other products with respect to the unsecured segment from RBI. So now if you take a look in Q2 FY25, HDFC Bank has grown the unsecured portfolio higher than others on a sequential basis. The unsecured portfolio for HDFC Bank has grown at 3.5% when compared to 2.6% quarter-on-quarter growth for Axis Bank and about 1% for Kotak Mahindra Bank. Axis Bank and Kotak Bank saw most of the slippages in Q2 FY25 coming from these unsecured segments. Like, for instance, Kotak Mahindra Bank said in their con call that 30 to 40% of their slippages have come in from unsecured products. So slippage ratio of HDFC Bank continues to be the lowest amongst peers at around 1.25% for Q2 FY25 when compared to 1.8% for Axis Bank and about 1.9% for Kotak Mahindra Bank. So despite the lower loan growth that they had sequentially of about 1.5% compared to peers who had better growth rate than HDFC Bank, the asset quality of HDFC Bank didn't deteriorate much and it remained largely stable. If you take a look, just about 3 basis point increase in the gross NP ratio despite lower loan growth. Back to you.
Absolutely, Abhishek, and that explains why for the longest time HDFC Bank has been commanding those premium valuations, right? Just pedigree and class in the way they run the business. But back to Deepak now on the specifics, Deepak, and this was a very interesting analysis that Abhishek also pointed out, right? You've got the large three banks. Let's leave out ICICI. Let's wait for those numbers to come in. But between these three, would you give the benefit of doubt to a Kotak and, try and buy in because obviously it's fallen? or would you stick with HDFC Bank, Axis? Your thoughts on the three?
No, Subi, I think first a disclosure, we are invested in 2 of the 3 banks over there. So from that point of view, we remain invested. These are steady companies, and you will see a steady multiple compounding, earning compounding as well over here. But from a fresh investment perspective, I'm not so sure. But as I said earlier, I think a lot of the PSU, tier 2 PSU banks, there's an interesting trading investment opportunity over there. Also, I think looking at a lot of NBFCs also, Bajaj Finance certainly comes to mind, and a few others as well. Where I think the numbers and the valuation are reaching a point where there's a good risk return profile to invest in them. The larger banks, I think you can buy them from a safety perspective, but I wouldn't expect too much of outperformance over there.
That's numbers coming in from CG Power. Revenues have gone up by nearly 20%. But there is a bit of a drop seen in the company's bottom line. Now let's get to the other big mover, and that's Tata Consumer, that slumped in trade, subdued second quarter. Mangalam now joins in to tell us the key misses. Mangalam.
Well, it's 5 reasons why Tata Consumer is weak in today's trading session. The first one, of course, is the beverages business. That saw a bit of weakness. It was led by both seasonal and competition factors. So beverages revenue in India were down by 3%. Volumes were down by 4%. They lost about 20 basis points in market share in the tea business as well. The other one was the ready-to-drink vertical, which was otherwise a very high-growing vertical for the company. But because of impact from, out-of-home consumption impacted by unfavorable weather and competitive pricing actions, revenues out here as well declined by about 11%. To add to all of that, growth businesses, which is something that the company targets about 30% growth out here, grew just at around 15% itself. So that was the third impact that came in. The management did speak about some softness in the category of the tea business. Food as well saw an organic revenue growth at just 9%, whereas volumes grew by 1% itself. The only silver linings were that some of their acquisitions like Organic India as well as Capital Foods have been doing well. Synergies are being realized out there. And the international business as well saw margins expand from about 10% to 15%. But a lot of the earnings estimates by a lot of the brokerages have been cut as well. There has been a downgrade that came in from ICICI Securities as well, from buy to add, and they've cut their earnings estimates by 7 to 8%. Goldman Sachs has cut it by about 10 to 14%. And then you have Morgan Stanley also, which has said that they will be watching out for market share more than margins going forward.
Dipan, the internals and the numbers are weak, as Mangalam pointed out, 5 key reasons. But are you surprised at the kind of fall that we're seeing in Tata Consumer?
No, not at all. I think there could be a deeper correction. And look at the valuation at which Tata Consumer is trading at. And yet it gives growth rates which are like sub 10% or so. And that's probably a problem across the board in FMCG and a lot of other companies. I don't know. I think internally we feel that the earnings season is turning out to be very, very disappointing, and it's going to cause a challenge for markets to stay afloat at these levels. I think industry after industry, we are seeing the stresses could be transient. Of course, management will say that things will improve going forward 1 or 2 quarters down the line. But as the numbers are being released, we are seeing that look at the valuation, look at what growth rates they have delivered for the second quarter, and what is the sustainable growth rate going forward. And you will find that the P multiples are very expensive.
What about IndiaMART? Now, IndiaMART has fallen close to about 17%. Prima facie, you look at the numbers, you'll see a 95% jump in the company's profitability. You see margins go up by nearly 10 percentage points. 27 becomes 38. Revenues have gone up 18%. But here the problem in the company is not transient, because the paid subscriber growth continues to remain muted now for so many quarters. And plus, this quarter collections have dropped. What would you do with a stock like IndiaMART now?
Yeah, well, first a disclosure, we are invested in IndiaMART. I think the correction a bit exaggerated. And look, end of the day, it's a great business. And I believe that they can invest further into sales and marketing. They were attempting to increase their operating profit margins, which they have already achieved. And now I think the next phase of investment may start into growing the businesses. For MSMEs and SMEs, it's a great platform. And I'm sure that they'll work around these growth rates. End of the day, it has got a very strong position in the market. And the platform in itself is very popular. So I'm not yet throwing in the towel as far as IndiaMART is concerned. And I think let's give them a few more quarters to work around how they can improve these growth rates.
This, by the way, this stock has fallen 50% from its all-time high. The all-time high on IndiaMART was 4,975. So closer to 5,000.
In the morning, my screen was frozen. For a second, I said maybe it's 17% drop. It wasn't. It was 8% at that point in time. Now it's actually become a 17% drop. It's been a pretty disastrous day for the stock, really. By the way, the mid-cap correction is showing no sign of abating. Look at it. There's now about a 900-point drop on the mid-cap index. And a lot of names are seeing plenty of profit taking. I mean, blue chip names like ABB, they've been lapped up by investors over the last couple of months, but the correction means about a 5-6% drop over there. Look at Coforge, 6% down. Look at names like NBCC from the PSU space. Edelweiss Financial down about 6%. VA Tech, Vabag. It's a long list of losers. And throw in CG Power to a result reaction that's not going down too well. That margin is a lot lower than some of the estimates on the street. The margin is somewhere around 12%. At the moment that margin figure flashed, the stock sold off because the expectation was that they'll be around 14.5 to 15%. And you can see that disappointment now playing out on CG Power as well. Deepan, before we let you go, a word on the whole auto debate as well, right? It's a big debate raging on two-wheelers, on four-wheelers. In the morning, we had Mr. Bajaj come in and he was dismissing a lot of the concerns, at least for his company. Two-wheelers and three-wheelers, saying wait for the final festive numbers and it'll get better. And then there's four-wheelers. Tomorrow is Hyundai's listing, and we all know that the question is what is the kind of growth you're willing to pay for? Is 5% going to be enough on an annualized basis? Your thoughts? One by one, let's take the two-wheelers and then we'll talk about Hyundai and what to expect tomorrow and in the times to come.
Yeah, I think that at least in the entire auto industry, maybe tractors excluding, you can expect slowdown for next 2-3 quarters or so. This keeps happening in the auto industry. 2-3 quarters go bad, and then again, discounting and new models and overall demand does tend to pick up. Penetration levels are low, so you can expect that long-term trends are great. And valuations are on the expensive side, but they're not completely, out of whack over there. And Bajaj Auto in particular, and a lot of other two-wheelers are also exploring the export market. So that can offer a bit of a growth for these companies. And Hyundai, I think we should expect a very tepid listing, as I've been saying so. And that could be because the quarterly numbers, I think, for Maruti, Hyundai, a lot of other four-wheelers for September, December quarter may be a little soft because of base effect, because of slower volume growth, as we have been seeing. The monthly sales figures have not been that encouraging. So you need to ride out this particular softness in the auto industry and maybe remain slightly underweight to equal weight within the sector and wait for the early signs of volume picking up, which could be 3 quarters down the line. One doesn't really know.
Okay, all right. Deepan, we'll leave it on that note for this afternoon. Then thank you very much for joining in. Look forward to having our next conversation very, very soon. Need to take a break right now. On this leg of the show, we'll come back and get in some perspective with Abhiram El Swarupu of BNP Paribas India. Find out how they're looking at this fall in the Indian market, almost 5% from the peak. What next?
Okay, welcome back. Look at the market, which is down 40 now. So yeah, 24,800 is where we are at. I mean, I think what Mitesh said earlier at the beginning of the show, if we are able to say with some amount of certainty that we are back in that 24,900 to about 25,230, which is the sort of recent high, in that range, I mean, that will work. You don't want, that's of course much better than a market which looks weaker, like what we've had over the last couple of days, and that gives you scares that maybe there's perhaps more downside. So you take that more than over sort of a bit of a unknown market any day. Abhiram Elaswarupu is with us, Head of India Equity at BNP Paribas. Abhiram, good to have you with us here. Thank you for your time. Your earnings estimates since the earnings season has begun, Abhiram, how have they moved? Have you lowered FY25 earnings expectations? By how much? And where are most of the earnings downgrades?
I think we've seen marginal changes to estimates, mostly cuts, I would say. And that's because we've had some large companies report. Certainly in the consumer area, we've had to downgrade numbers a little bit. Maybe not so much in IT. I think it's still early days with banks. Haven't seen a huge change. But if we just take a step back, I think of the top 100 companies, maybe only about 1/5 have reported so far. Earnings trends are generally in line with or slightly weaker than what they have been in the past few previous quarters. And to be fair, the largest and best companies have reported so far. So chances are that we may see a few more downgrades as we go ahead in the season.
All right. Hi, Abhiram. Good afternoon and good to see you win. But you're still saying that India's structural drivers are pretty much intact. If that's the case, some of these misses could be making the markets jittery, which in turn provides an entry opportunity. So what's that theme, that sector that you're still bullish on?
I think we need to look at that statement within perspective. The market's already returned, let's say, 14-15% year to date. Maybe the small and mid caps have returned more than 20%. That's probably more than what we would have expected at the start of the year. So far, things have gone quite well. Now, the structural comment is in light of what investors or the media has been talking about on the China effect and funds flowing into China away from India and so on. So I just wanted to kind of reiterate that from a 2 to 3 year perspective, we still see a lot of structural drivers in India. So that doesn't change. Now, the sectors that we prefer from here on within that, first, of course, we think that where there's really some value, it's still in large cap private sector banks. Again, we've got to be a little selective there, not all banks, but where we like some are those. Then IT services, where we've held a positive view for some time now. And maybe selectively in areas such as maybe hospitals, logistics, EMS. Those are the areas where we're looking at.
And this pain that we are seeing in consumer stocks, where some earnings downgrades have been, do you expect it to be transient? Do you expect things to pick up in Q3, Q4, or will the pain be a little more long-lasting, at least maybe till the end of FY25?
I mean, we think that the pain will last till the end of FY25. I think after the results and then the budget, there was a lot of expectations that consumer staples companies will turn around, will start to improve. That said, if you take history of, let's say, 5 or 10 years, growth rate has actually lagged GDP growth, nominal GDP growth at least. So the sector seems to have gone into this bit of a growth rut. And more so now, a little bit of margin pressure is also building, certainly on the raw material side. Obviously, valuations aren't exactly cheap. And the growth expectations that analysts seem to be building seem to be far ahead of what companies are actually reporting. So I would sense that, staples is probably not the place to be if you have a 2 to 3 quarter view.
Abhiram, hi, good afternoon. So not venturing into staples, looking at IT and I think private banks, you said. What else, given the uncertainties around us, valuations, etc., how else are you rejigging the portfolio, if at all?
Well, I think there are 2 important catalysts to look out for over the next, let's say, 2 or 3 weeks. First and foremost, of course, we continue to have earnings. And as I was mentioning, maybe we'll see a few more cuts rather than upgrades at this stage. And that's probably a time to kind of reevaluate. More so from a global perspective, what you will see in the next 2 to 3 weeks is the US election results. And, if assuming there are no major surprises, then they may not have a big impact on the market. But if there's a wave either way, red or blue, that could have an impact. The next bit is on China. I think the next catalyst is really in December. So maybe you can assume that that subject may be a little dormant for the next 1.5, 2 months. Then it just boils down to what India is doing and what the results are. By the end of the quarter, I think that people will go back to structural stories. What we're seeing today, I mean, you see the start of the, or till now this year, what investors were taking sectoral bets. They were taking the views, let's say, industrials will do well, or metals, and so on and so forth. They took very clear-cut sectoral views. Certainly, power was one of them. Now what we are seeing is intra-sector shifts. So a lot of rotation within sectors and companies that are performing versus those that are not. And that's usually typical of a market where valuations are somewhat full. So any results that are not going as per expectations, maybe you start to see investors shift out pretty immediately into the best performing stock within that space. I think that's what's likely to be the theme for the next 2 to 3 months.
Having said that, I take that point completely, that it's going to be very granular, because no two companies could be showing the exact same trend. It's a very different market. But having said that, I mean, what would your top exposures be for every new rupee that you're getting? I mean, how are you cutting it up in terms of allocation?
Yeah. In a rate cut environment, usually, and going back into the, let's say, take a view of the next 6 months or so, financials will be our top preference, especially the really large banks. As the liquidity environment improves, and we're starting to see that already in the last 2 to 3 months or so, that's when usually banks do well. You're already starting to see deposit growth kind of pick up. Maybe we think that over the next few months, it'll start to match credit growth as well. So I think private sector financials would be our top ideas. Second would be large cap and maybe some mid cap IT as well. And that's usually a reflection of rate cuts in the US, which usually tend to spur capex and hence IT spending. These two will be the clear-cut preferences. I think that'll be followed by some structural story. The one that we really like at the moment is EMS companies in India. We're seeing growth rates of 30, 40, 50%. I think that is a long-term kind of view that we've taken. And in general, if you're allocating incremental capital, it's more likely to go into what we've always called affluent India versus more mass market. I think that theme over a 3 to 4 year period is still the place to be.
Okay, Abhiram, final question before we let you go. You know, just around 45 minutes or so ago, we had UltraTech Cement's numbers that came out. And over the weekend, we had Dalmia Bharat. Now, both these two stocks, the miss in comparison to the EBITDA number was anything between 6 to around 8%. However, both the stocks are only down close to 1% and 1.5%. What's your view on cement? For the time being, it seems the street is lending that long handle. Maybe second half of the year will be much better. Would you buy into that thesis? And we have a couple of these other names, like Orient Cement, as we speak, is at the high point of the day. Your view, how do you approach the space?
Well, to be honest, I haven't done a whole lot of work on cement off late, but we're taking a general view that as a house, we've taken a view that capex is not going to be as bad as people think going into the second half of the year. Order inflows in general are not looking very great, at least from a quarter perspective, but we think that execution is starting to pick up. So overall, from a capex perspective, real estate and all of those exposures, we think that things are not as bad as feared. And that's probably what the market is agreeing with. And that's the reason why when companies are missing numbers, the stocks are not falling as much.
Abhiram, you said the next two catalysts to watch. One is the US election and the other one is on China. But you're saying we'll have greater clarity on China only in December. What happens in December?
I mean, whether there's a question of more stimulus or not, okay. I think if you see what's happened with China, obviously the market's gone up a lot, 30, 35%. And once the measures started looking like somewhat underwhelming, then more than half the gains have gone away. And therefore, the next thing really to watch out for is there more stimulus coming? And I think the big meeting is, the next possible meeting for that is in December.
Okay. And Abhiram, just to go back to that earlier point on capex, because capex has suddenly become a untouchable area, right? A complete no-go area. You mentioned EMS as one space, which you're still positive on. What else? And right now, I'm not asking for a 2 or 3 quarter view. I mean, portfolio call, say at least for the next 1 year to 2 years. What will you stick to in terms of capex? And the problem is where to allocate fresh money, right? Given how high the valuations had gone.
Yeah, I agree. Frankly, valuations make it extremely difficult to pick stocks in India. That's a feedback we're getting from clients across the board. But if you look beyond EMS, then I think the next one is really interesting, maybe logistics. Still a structural story. and you take that exposure without the inherent risk of the underlying commodity and so on and so forth. So therefore, logistics overall is a space that we've liked. It's generally looks a 3 to 5 year story. So that's probably worth looking at.
All right, there's some news at the bottom of the screen. This is, I think, very, very important. The Ministry of External Affairs says that they've closed an agreement with China on the line of actual control, and that's the LAC. India and China reach an agreement on disengagement, and regular patrolling will start along the sort of line of control. So Indian and Chinese military negotiators have reached an agreement. This is the Foreign Secretary who was talking about the border issue in eastern Ladakh. That is what is coming in from the government of India. And I think pretty important and pretty significant. This has been sort of, I think, simmering for the last at least 4 years, if not longer. And if this is indeed, sort of some sort of an agreement to, as it suggests, to disengage and kind of go back to how things were before that entire issue really started. I mean, from a sort of tension perspective, geopolitical perspective, it's very, very important.
And I guess this is extremely significant because till now we've not had a public announcement of this nature from both sides on sort of a planned disengagement. The choice of words is very, very careful over here. And of course, who knows, I mean, if all goes well, we know a lot of implications, of course, geopolitical implications then go on to businesses as well in terms of heightened scrutiny and, MHA clearance, etc. So perhaps it would be good for business as well in the long run. But right now, of course, a very, very positive development when it comes to neighborhood sort of, equations.
On the business side, Surabhi, it's already... I mean, actually, the business followed first, I think, because that
with all the BYD cars that we see on the roads here in India, right?
I mean, so the Press Note 3, which had a lot of rules restricting foreign investment from China into India, that has already been kind of, I mean, tempered down, and I think that has been happening. And I think now, if this is happening on the ground, then absolutely, it's important news which is coming through. But I think UltraTech is also reported numbers. And let's take it to Nigel. Nigel, how do they look?
Well, the numbers were weak actually, but the stock is not falling off the cliff. Let's run you through the reasons. Well, the realizations as well as volume growth a little bit lower than what the street was working with. And select costs were higher than estimated. Now, just to pull up all the numbers, if you look at the revenues, you look at the EBITDA margins, profitability, all of them did miss what we were working with. So a few factors that played out. First, the domestic volume growth was 3%. We were working with a number of around 3.5 to around 5%. So that's a small miss on that front. And the utilization levels were at around 68%. That compares with more than 80% on a quarter-to-quarter basis. Realizations took a knock. They were down by close to 8.5% on a year-on-year basis. And their product mix actually is quite strong because premium product mix is close to around 23%, which has been stable over the last few quarters. How do they gain? Well, on the power and fuel costs. So power and fuel costs, if you look at the fuel consumption, that has come down by close to 10% on a quarter-on-quarter basis, and on a year-on-year basis, it's down by close to around 18%. Green power as a percentage of the mix has moved up. They have been focusing on the WHRS, which is the waste heat recovery system as well, and that's why those costs have come down. Even if you look at, the power cost actually has come down. Now, where is the problem then? The problem was on two aspects. One is the raw material cost. Well, on a quarter-to-quarter basis, it was up by close to around 3%. On a year-on-year basis, it was up by 1%. So that was one of the factors that hurt them. The other factor is the other cost. The other cost per ton, that has spiked up by close to around 14% on a quarter-to-quarter basis, and it's more or less flattish on a year-on-year basis. What happened there? How come we saw such a big spike on the other cost per ton? There was a plant maintenance activity that took place. There was an annual increment as well that's reflected in there, and impact of not getting operating leverage. So both these two costs, raw material costs as well as other costs per ton, both of them hurt them. And put all this together, it resulted in the EBITDA per ton coming down by more than 220 rupees on a per ton basis, which is a disappointment. The reported number is around 732 rupees per ton. Most on the street were in that vicinity of around 770 to more than 800 rupees. So that's a miss on that front. The debt number as well has moved up because they've been expanding capacity. Give and take everything, the numbers go down as a miss. The past quarter was a disappointing one, but it appears the street is prepared to look ahead to the second half of the year, and they're hoping that volumes will pick up. You'll have realizations that should be more or less steady, and they'll get the benefit of lower input cost as well. So the numbers are disappointing, but it seems for the time being the street wants to look ahead with this big boy. Well, that's about UltraTech. I think for the time being, what we'll do is we'll take a short break, come back, continue to focus on markets, and Nimish will join us to give us an insight in the Street Chat. Welcome back. We have come in for a fresh bout of selling. Now the Nifty was trying to pull back into the green, but now we're down yet again close to around 70 points. Wipro has moved to the low point of the day. HCL Tech as well. These are stocks that were actually in the green earlier, so they have moved off. And Tech Mahindra, after starting off with a gain of around 3.5%, there is some profit taking. So Tech as a pack should come up for you. The IT index will tell you the picture. One of the reasons why we are still down close to 65, 70 points. But let's find out what's going on in D Street Chatter. Nimesh joins us to tell us exactly that. Nimesh, what a volatile day. You could whipsaw either which direction. What are you picking up?
Absolutely, Nigel. It's extremely choppy, and every attempted pullback got sold into. Yeah. I understand there were a couple of basket sellings in the first half and in the second half as well, and that's added to the pressure, especially in the Nifty names. But the bigger pain is in the broader market stocks. The mid-cap index is down 1.5%, and now you're seeing the portfolio is getting hit. I've been saying for a while now that the traders are not making money. Now it looks like at the margin, even the investors are losing money at the portfolio level. So that's something which is hurting the broader market stocks in today's market. And we've clearly lost the momentum.
Yeah.
We saw it in PSUs, we saw it in other sectors as well. And now we are seeing in the broader markets as well. The only sector which stands out today is autos, and there is a bit of buying interest as well, is what I understand. So that's well bid from an institutional point of view. But otherwise, you're seeing very sharp reactions to earnings miss now. And that again shows the sentiment in the market, right? A small miss, and we're seeing very sharp reactions. RBL Bank, Kotak Bank, IndiaMART is down 17%. IndiaMART was not a howler of a number. Yeah. It's just that, the collection data was quite weak, and we saw a big correction in that name as well. So again, that shows the sentiment in the market that people are now willing to sell on a bad news and buy into the good news. So that's the kind of a market right now. And clearly, we've lost the momentum, at least in the broader markets. That's from a flow perspective.
Well, Ramesh, one stock that hasn't participated in the big party was HDFC Bank. And now it appears it's the lone batsman that's batting, and the wickets are just falling around because that's up 2.5% in this sort of a market.
And rightly so, Nigel, because I think Abhishek explained it very nicely.
Yes,
this was a very strong quarter for HDFC Bank versus peers.
Exactly.
So from that perspective,
asset
I think
quality,
absolutely.
Their focus.
So there is a very interesting note from, I think, Jeffries or somebody wrote today morning that HDFC Bank this quarter number resembles what it was pre-merger. Consistent number, back quarter after quarter, they'll report the same set of numbers without any surprises, and that's what HDFC Bank did in this quarter. So I think the market has taken a note of that, and maybe that's the reason why it's outperforming.
In this sort of a market, up 2.5%. Yeah. But Ramesh, tell us what else you're picking up in individual stocks.
In terms of individual names, the first stock is M&M. I spoke about buying this back in auto names. M&M stands out on back of very aggressive buying at a leading FIDs. So looks like some institutional interest is back in M&M at these levels. The second name is Gandhar Oil, a small stock, been under pressure of late. Even today the stock is under pressure. But I understand the company is likely to raise funds via preferential issue very soon. So that's the buzz in Gandhar Oil. The third name is Coforge. Surprisingly, that stock is under pressure again today. Again, there is a strong buzz and indication that maybe a large block is expected very soon in Coforge. Even last week, we saw a couple of large blocks. Some domestic mutual fund participated, but there is a PE overhang on Coforge which continues, and that's the reason why that stock is under pressure today. And the last is Mahanagar Gas, MGL. For the second day running, that stock is under pressure. We saw a big cut on Friday. But here at these levels, I understand there is a bit of nibbling happening from some domestic mutual funds. So expect high delivery volumes, but there is buying as well at lower levels in MGL at this price.
Okay, all right, got it. Thanks for all of those updates there. Interesting data points, Ramesh, as always. By the way, before we carry on with the market conversation, since that important sort of national level news broke on our ticker just a while back, we'll get the flashes up. The fact that the first time in many, many years, India and China are officially making a statement that they will be looking at disengagement along the line of actual control. Here's the Foreign Secretary spelling out the details. Take a look.
You're aware of the events that took place in 2020 in several areas along the line of actual control. We've been in discussions with Chinese interlocutors, both at a diplomatic level, through the WMCC, as was mentioned earlier as well, and through the at the military level as well, through meetings of the military commanders at various levels. These discussions had in the past resulted in the resolution of standoffs at various locations. You're also aware that there were a few areas and few locations where the standoff had not been resolved. Now, as a result of the discussions that have taken place over the last several weeks, an agreement has been arrived at on patrolling arrangements along the line of actual control in the India-China border areas.
Okay, let's get back to the markets. We've got about a little more than 10 minutes left to wrap up trade. Mitesh is back with us for a few BTST calls. Mitesh?
Yeah. So I have STBT on DV's lab. This is one stock which is doing very well. Now showing first signs of profit booking. So take a stop at 5945. Maybe look for targets of 5880, 5885 for tomorrow. And the other one, the other call which I have is a STBT on Godrej Properties with a stop at about 3046 and a target of around 2980.
Okay, all right, Mitesh, got that. By the way, just going back to some of these stocks that have seen really sharp result reactions. Thanks very much, Mitesh, for that. Of course, we'll see you with the market again tomorrow. CG Power, as Rima was just pointing out, look at this, stock's down about 6%. Remember that on the top line, the numbers seem to be more or less in line, but the issue seems to be on the margin front because that 12% number at the EBITDA margin line is something that the street is simply not too happy with. Let's discuss this and other results of the day with Sudeep Bandopadhyay, Group Chairman at IndiTrade Capital. Sudeep, good to have you on. So let's start with CG Power right there. Your thoughts on the stock and, in general, any slightly negative earning is also being really rogered today. But specifically on CG Power, what's the view?
Well, the market is in a mood not to excuse anything, even mildly negative. And they are being severe. That's pretty much what we are seeing with all these companies which are producing, coming up with margin pressure. I think that's what I think.
I think we have Sudeep on a bad line. We'll try and just get him back in a bit. By the way, look at JM Financial. Stocks down 7.5% make that. So the cut on the mid-cap screen is pretty wide and deep.
Even Edelweiss Financial, Motilal. So the entire brokerage theme is getting slammed today.
I guess so, yeah. So, I mean, apart from earnings, I think general profit-taking from wherever you've got money on the table
because,
seems to be
just
the
one
issue.
thing, Moti was the best performing sort of stock last week.
Yeah.
I mean, it was up 30% in 5 days.
Yeah.
So, I mean, there's that as well.
Yeah, absolutely. On the large cap screen, I mean, the Nifty is still down about 72, so not too much changing, and the cuts are pretty similar. In fact, Kotak is now a little better off. Kotak at one point was down 6%. Now Kotak Mahindra Bank has reduced that pain to about 4.5%. Bajaj Finserv, by the way, is lower. Bajaj Finance is reporting numbers tomorrow. Let's see what the stock is doing. Down about 1.5%. Not sure if we have Sudeep back with us. Yeah, we'll get him back. By the way, Bajaj Auto is the winner of the afternoon. Before we sign out, we'll try and play out that soundbite that Mr. Rajiv Bajaj shared with us. It was a long conversation with Parikshit where he says, first of all, no need to panic over festive season sales just yet. He's saying by the time the season ends, for all you know, you could be looking at double digits sales growth, at least for Bajaj Auto. And he is retaining his target on his own stock, saying 20,000 is a fair level if you're talking about the long term. And in fact, he revealed to us that he himself is thinking of buying some stock from the market. Take a look.
What happens in a typical month through the year is that this retail lags the registration by a few days to a week or a little more, depending on the state that we're talking about. But at the festive time, the gap becomes considerable. For example, I can tell you, on the day of our board meeting last week, our motorcycle Vahan registration was only about 2/3 of our dealer retail. Now, this happens particularly so every few years in a month like this October, where you have a double whammy of Dussehra and Diwali. When we come to, let's say, early December, when Rakesh will speak with the CNBC again, we may well turn around and say that now the growth is closer to double digit and not lower single digits. We are seeing really good traction finally with exports. It's a question that CNBC anchors have been asking Rakesh for the last year or so. Last month, as you are aware, we clocked exports of 156,000. After a long time, we exceeded 150,000. This month, we are looking at 170,000. And next month, I believe we should be closer to 180,000, which is, near our pre-COVID normal of 200,000. So that is what is going to mainly drive the factories incrementally this month and next. I don't know why the stock corrected. I mean, a stock that has grown by almost 100% in 12 months has to correct at some point, I would imagine. But as far as I am concerned, I stand by my projection of 20,000 rupees as the long-term target price in my head. Not that I am the expert of this subject, as I've always said. But more importantly, I am certainly, if I can, going out and buying some stock because something that corrected 20%, perhaps based on a somewhat temporary understanding of an evolving situation, presents a nice upside in the weeks to come.
That's Rajiv Bajaj on, in a way, talking up his own share price. The stock price is up 4.5%, top gainer. Get into a break. We'll come back with more on the market. Stay tuned.
Welcome back. Just a few minutes before we wind down, but just want to point out that a few stocks appear like they're going to be going into the F&O band, just going by the open interest built up. You have IndiaMART, massive open interest built up. That one is likely to go into the F&O band, so keep an eye out on that. The other one that I'm looking at is RBL Bank. If you just take a look at the open interest built up, both these two, they're almost sure that they should be moving into the F&O band, going by the open interest built up because it's much higher than the threshold limit. Manappuram as well is another likely candidate to move into the F&O band. So keep an eye on all these three. IndiaMART, you'll have RBL Bank as well as Manappuram. Three of them likely to go in, but a couple of them could come out. Nalco looks like it's fallen below that threshold limit with regard to open interest, so that could come out. And Tata Chemicals is the other one as well. You're seeing quite a bit of unwinding on both those two counters. So in all probability, they could come out of the F&O band. But I think we're in the final minutes of trade, so I'll toss it back to the studio anchors, guys. Mid-cap index down 1,000 points. The Nifty is down 92 points. Or HDFC Bank, that's the lone ranger today, batting for the Bulls.
Just one stock I want to highlight, that's PNC Infra. That's locked in a lower circuit of about 20%. This is after the Ministry of Road Transport and Highways of India, MORTH, has disqualified the company and two of its subsidiaries from participating in future tenders for 1 year. This disqualification is with respect to an FIR and charge sheet filed by CBI. So it doesn't affect the ongoing construction, the order book on hand, but any future orders, the company will not participate, and that's the reaction.
I just remember PNC Infra last week, I think it was 4 or 5 days back, won huge amounts of orders in Maharashtra ahead of the code of conduct kicking in this state. I think the total value of those orders went above 4,500 crores. But now comes this, of course, a major negative move from the central government side, and we will see how it goes. We're trying to, of course, get the management to speak, and we will try and touch base with them again. But for the time being, I think it's time to wind down what has been a rather volatile day. Let's start by looking at the VIX, because the India VIX was up about 4.5–5% through the session today, which is a little unusual. It just tells us about the heightened volatility that the market had to navigate. There you go, 6% now on the VIX, almost touching 14 as we're closing out. Okay, let's talk about the large cap picture. So HDFC Bank deserves all the honors today for ensuring that it wasn't a wider fall and that we're not ending below the 24,700 mark. Reliance and HDFC Bank pulled their weight together and, as I said, prevented that wider collapse. Bajaj Auto, after the comments that came in from Mr. Rajiv Bajaj, up about 4%, some buying on Eicher and M&M. So basically some of the underperformance on the auto side that was correcting to an extent. But then you have a long list of losers. Tata Consumer, Kotak Mahindra Bank, of course, the two major result disappointments on the Nifty, BPCL, Bajaj Finserv, long list of losers, like I'm saying, IndusInd Bank, ONGC, it's just cutting across sectoral lines. The Bank Nifty is going home with a cut of exactly 0.4%, very similar to the Nifty today.
Well, in the broader markets, way more downs than ups. But on the way up, Amber Enterprises, 20% up. Stock moving up in the last 30 minutes. Comes out with numbers tomorrow. Tejas Networks has reported a strong quarter. They're executing the BSNL deal, 11.5% higher. Tata Chemicals, Oberoi Realty, Zomato are some of the stocks which bucked the downward trend and closed up with strength with good volumes. On the way down, we spoke about PNC Infratech, but IndiaMART, RBL Bank, Motilal Oswal, Ola Electric, L&T Finance under pressure. So Z Entertainment. So these are some names.
I think the only consolation is when we were tracking those Nifty moves in the last 30 minutes, but from 3 o'clock to 3:30, as we're counting down, there's been about a 20-odd point down move from 3 to 3:30. So, that's essentially what we have seen. But yeah, I mean, it's a day of large moves once again. Friday was one. You had those city gas companies selling off, Manappuram selling off 13–14%. And I think that continues, and mostly on the downside once again. So yeah, I mean, a tough day for broader markets, tough day for the for Nifty traders as well. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thank you for staying with us. We have markets forward coming up on the other side. Stay tuned.